Hey guys, all right. Last recording probably for today. Maybe I might do one later, but S&P 500. Everybody's obsessed with the S&P 500. The S&P 500 daily crash watch. The S&P 500 head and shoulders. The S&P 500. You know, whatever. This has not really been a V recovery per se. It has in the Nasdaq, but not in the S&P. The closer we zoom in, and bear with me. I know I got a lot of lines here, but I need these lines to kind of channel my intraday shorts and longs and stuff like that. And hopefully I can clarify these. The V recovery would have put us kind of on this trajectory right here on this line. And we started that. We kind of pulled back in, and this became a little bit of an energy line on the V. But then we kind of changed trajectory here and started to go into this little upward momentum channel, which was obviously a lot less of a strong trajectory than the V recovery. And this is kind of a healthy move, believe it or not. As fast as the market rose in record time, it probably did that because of the record drop. I don't think it's ever dropped that fast, other than the crash of 1929. That was a pretty big drop in a pretty short period of time. I may be wrong on that, but the recovery was not a mirror image of the reversal in terms of, the shape of the V. We kind of went into a V pattern, then we started to go sideways. So it's crazy how people are talking about a crash here when we haven't even broken below the 20-day exponential moving average. We haven't even broken the 50, and we're far from the 200. And we're already talking about, every time the market pulls back from an overextended level, people freak out. I mean, we've gone a long way here. Can you imagine if we pull back down to this trend line, which I think is possible in the 279s and 280s? People be freaking out saying it's on, we're done, Great Depression. And we're not even in the top part of the sideways consolidation channel. So I get it. That's a lot of energy we saw Friday. Big reversal, right? Engulfing bearish candle. I understand, but we haven't even broken the 20. So first thing to look for is that if we don't get above 211 or 311.48 on SPY by Wednesday, I believe the market's going to go down and touch the 298 area on SPY. This is my prediction. I'm not guessing. This is what my chart tells me. If we don't get above 311.48 on a close by Wednesday, I believe we're going to go and touch 298 on SPY. It might do a zigzag on the way there. I don't know. One way or another, it's going to probably try to tag 298 and change, which wouldn't be such a bad thing anyway. So, let's get rid of this here. But interesting thing is, in this whole move up, once we broke above the 20 on this candle here, the 20-day exponential, and back tested it, and then back tested it, we've only spent 1 day under it each time, right in here. This pullback to the lower channel, 1 day, and then we're right back above it. Same thing, overextension. Now we're pulling too far away from the 200. Island reversal, 1 day under, right here, this candle, and then right back above it. Now we're on the verge of getting back below it again. So this is not a leg up here that we've seen. It doesn't have the characteristics of the prior legs up, because the prior legs up, we break the 20, okay? We spend 4 or 5 days consolidating, and then we move to the higher top of the channel. We break the 20, we spend 4 or 5 days consolidating, and we move to the top of the channel. We break the 20, we spend 4 days consolidating, but now we're breaking back down below the 3 and 4 day consolidation, where before we've never really retested the low part of the channel, the 3 or 4 day consolidation. So needless to say, and I said it the day it happened, I said I think the market's hit a short-term top. Doesn't mean we crash. There can be an intermediate area between there, and I think that's what's going to happen. Even if we go back in this channel, which I think would be great for trading, I would love to see us get down here, and then we could refresh and start a whole new buying spree of stuff that we like. Once again, the economy looks horrible. It's scary. The second wave, I can't imagine what it's going to look like in the winter. It's kind of freaking me out, but I'm a kind of a glass half full guy anyway. I have anxiety and this. But this is just what the charts are telling me. So that can change, but that's my prediction for now. And then I have a new channel forming here, a downtrend channel. And the channel kind of looks something like this. We're back testing it, and I'm going to use this for my trading too as well. Intraday on SPY. I might just start trading SPY from now on. Individual stocks are getting too crazy. I tried to short Spotify on Friday, and it was all over the place. It was like I got stopped out a few times. I was right in the direction. I might have to go smaller size. But I kind of felt it roll over at the end of the day. But in the meantime, it ripped me out a few times, and then I had to re-short it again. Ended up losing money. I had the right idea. just the price points are difficult because of the intraday swings, and some of these things are maddening. But here's the downward trajectory channel. You can see here's the break, the retest, and then the energy line pull back up. And it's kind of figuring out what the hell it wants to do here. But we haven't even broken the 20 yet. So, let's get below 307.20 on Monday before we start thinking about going lower. But that's my opinion. If we don't get it back above it, it's not showing the characteristics of prior legs up, right? If we don't get back above the 311 and change area on a close by Wednesday, then I think we're going to go test the top part of the lower channel here and possibly break into the lower part of the momentum channel. And I'm kind of averaging that around 280, 298, 299. So let's keep that in mind. Need to get above 311 really quick, or we're going to go down and retest those areas, which, funny enough, would probably line up pretty close to the 200-day exponential moving average. So those are numbers. I can change them later, if things change overnight and we see a huge gap down. It'll tell me there's a little bit more energy. We might have to adjust our numbers, but for now, let's just keep that in mind. If you can replicate these channels, I think they've been pretty accurate for now. If we open up down on this yellow line of the lower part of the momentum channel, that's one line there. It also lines up perfectly, almost to the penny, where it crosses over. Actually, it doesn't. It's actually a little bit further off on the time frame, but this is an important line too as well. So if we gap down at 303 and change on Monday morning, then you could get a lot of energy on the bounce from there. So these are important lines. I think they're more important than the moving averages for now. We got the furthest above the 200-day moving average that we've seen since this rally. We wanted to gravitate back towards it, and then we bounced. So we're kind of in a little bit of a bouncing ball mode here, right? From the 200, move up, bounce, and then probably pull back again, and then maybe make some type of a move up. But this is not an unhealthy move in a market that's kind of, interestingly enough, believe it or not, just kind of gone a little bit sideways from the V, right? Pulling back and looking at it looks crazy, but as you start to zoom in, you start to see more of a sideways trajectory, which is kind of healthy. So if we just pulled back and got onto this line here, it wouldn't be so horrible. We'd be below all the moving averages, but as far as channels are concerned, it wouldn't be insane. Hopefully we don't, for people's sake that it just are buy and hold. But for trading, I think it would be fantastic. But my opinion is like 298, right? 298 and change if we don't get above 311. It just has to do with time and energy. And the kind of the movements that we've seen prior are starting to change a little bit in the characteristics of their shape. And then one last thing, let's add the study, and I'll show you. We'll do the comparison study that we do on the McClellan oscillator all the time. And that is a strength study. Where is it? Market strength and McClellan oscillator. So also works right in with the time frame that I'm talking about. And this one's really helped us out a lot. The McClellan oscillator, because it encompasses a large group of stocks on the New York Stock Exchange. So we got the move that we expected to the upside. We kind of broke that little downward trend. We retested the lower area before the next move up. We couldn't break above the old prior high, even though the price point was much higher in this rally, right, than here. Way higher. But the average stock wasn't participating. It had more to do with the 10 stocks that make up the majority of the strength of the S&P 500. So this gives us a better average, an idea of what each stock is doing. So shoot up there, make a relatively weaker move in here, and then a real red flag here was when we made this higher price point in here, yet this price point was a lot lower. So we pulled back, red line, and now we're hitting again. If we start to see a break below this red line here, it'll be the first one that we've seen since the rally started. And that could tell us that we're definitely going to start retesting some of these lower channels because the market breadth is really starting to erode. We want to see that kind of hang inside this channel here, right? Even though this can have a lot of movement, we don't want to see the market breadth deteriorate to the point where it's starting to break below some of these prior lows that we've had on prior V recoveries within the context of this rally. And if we go up from here, that's May 13th. You can see that was this little dip in here. And that was the sideways consolidation, pull back along the lower channel line before we fired to the upside. So hopefully we'll hold that. That'll be a real telltale sign as well. We don't want to see this get below the red line, and we definitely don't want to see it get below this right here, because then it's game on that we're really going to go down and test some of these lower channels. That'll be an indicator for sure. So keep those numbers in mind. I think that's how it's going to play out, but we can tighten those up as the futures open up.